It's still firmly in focus because of the broader interest in real-world assets, the demand for on-chain exposure to gold without the logistics of physical ownership, and the simple fact that gold remains a core macro hedge that many participants want to hold in tokenized form. If this is useful, hit the like button, subscribe if you haven't already, and leave a comment with your honest take on PAXG. I actually read them. Looking at ratings and signals, pure crypto technical scanners often produce mixed or neutral readings because the token behaves more like a commodity proxy than a typical speculative crypto asset. You'll see fewer aggressive sell or buy signals driven by crypto-specific momentum and more commentary tied to gold's macro outlook. Funding and open interest exist but tend to be secondary to the physical market. The short-term outlook from pure chart-based sources is therefore less about crypto cycles and more about whether gold itself is overbought, oversold, or consolidating. On the technical side, the bigger picture for PAXG is almost entirely driven by the physical gold market. Price action follows gold's daily and weekly swings rather than independent crypto narratives. When gold trends higher, PAXG tends to follow. When gold consolidates or corrects, the token does the same. Momentum indicators largely mirror gold's own readings. Short term, it can show relative strength or weakness versus gold depending on liquidity and exchange premiums or discounts, but the dominant force remains the underlying metal. You can argue there is some resilience when gold holds key support, but any independent chart analysis has to start with the gold price first. What's going on with PAX Gold right now? The chart moves almost in lockstep with the physical gold market. Short-term sell signals appear whenever gold itself pulls back, and yet some people still argue this token is somehow undervalued relative to its underlying asset. How do those two views even sit together? Let's talk about it. PAX Gold is a gold-backed digital token issued by Paxos. Each PAXG represents one fine troy ounce of London Good Delivery gold stored in professional vaults, with regular attestations confirming the physical backing. It trades on multiple exchanges and can be redeemed for the underlying gold under the issuer's terms. It currently ranks near the top 40 by market cap, with solid daily volume, and the price has been trading near the levels you're seeing, essentially tracking the spot price of gold itself. That's the core tension. The product works as intended and offers real utility for on-chain gold exposure, but the market largely prices it as a direct proxy rather than an independent growth asset. Retail often gets caught here, treating it as a pure crypto play while the dominant driver remains the gold market. Here's the real debate. Is PAXG actually undervalued at these levels, or is the current price simply a fair reflection of the gold it represents? One side points to the convenience of on-chain gold, the ability to transfer and use it in DeFi without handling physical metal, the transparency of regular attestations, the distance from any previous gold highs, and the idea that tokenized gold could see growing demand if more capital seeks regulated real-world assets. They argue that any premium or discount to the gold price creates opportunity and that broader RWA adoption could support higher relative interest. The other side says look at the mechanics. PAXG is designed to track gold, so large sustained premiums or discounts tend to be arbitraged away. The token's value is fundamentally tied to the physical metal and the issuer's ability to maintain the backing. If gold itself is range bound or under pressure, the token has limited independent upside. Risks are meaningful but different from most crypto tokens. Volatility is primarily gold volatility, not crypto style swings. A broader risk of move that hits gold, changes in interest rates, or shifts in macro hedging demand can pressure the price. Counterparty and custody risk exist because the token relies on the issuer's vaulting, attestations, and redemption process. Liquidity is solid on major venues but still thinner than the largest crypto assets, so larger moves can still create temporary premiums or discounts. There's also the structural risk that comes with any tokenized real-world asset. Regulatory changes, competition from other gold tokens, or a drop in demand for on-chain gold exposure can affect relative interest even if the physical metal remains stable. Bull case versus bear case is fairly clear. Best case, gold itself enters a sustained uptrend driven by macro factors, demand for regulated on chain gold grows, and PAXG tracks higher with occasional premiums. In that scenario, the token benefits directly from the underlying metal's strength. Worst case is the opposite. Gold consolidates or corrects, demand for tokenized gold stays muted, and the token simply tracks sideways or lower with the metal. In that scenario, the undervalued conversation is largely about the gold price itself rather than any unique token premium. Short term, the picture is almost entirely dependent on gold's next move. You need to see the physical market reclaim key levels with volume before any meaningful short term buyers for PAXG can flip with confidence. Longer term, it comes down to whether tokenized gold continues to attract capital as a convenient on chain alternative to physical metal. That's the path that keeps the current levels looking constructive rather than just a pure gold proxy. Nobody knows which way this resolves. The token continues to track gold as designed, the product remains one of the more established regulated gold-backed assets, and the market remains selective about which real-world asset stories it rewards. So the real question is simple. Is this the kind of project that can keep expanding its role as the go-to on-chain gold exposure and benefit from any sustained gold rally? Or are we just watching a well-functioning gold proxy settle into the same range-bound or directional moves as the physical metal while people argue about valuation?